PSV Academy and this startup talk on fundraising as a female founder. I am Louise and I am the program manager and here at the Academy, and I will also be the host and facilitator for today's talk. Before we begin, I just want to give a little bit of practical information, and also for all of you that haven't been to the Academy before, I just want to give you a 2-minute introduction to who we are and what we do and why we do it. And if you have been here before and been to our Academy, you can go grab a cup of coffee or something and come back in a couple of minutes. So just to tell that the Pre-Seed Academy is curated by Pre-Seed Ventures in an effort to kind of give forward all this tacit knowledge that we as investors, but also our founders possess. And kind of like give you the knowledge that you can't read in a book or that you can't find in an academic program anywhere else. So we've been around since 2018 and primarily held a lot of events, but we are since December also building up a big platform where you can explore all sorts of topics, also our previous events, and kind of like building this platform or this place where you can, no matter where you are in your journey, your startup journey, you can hop in and see, okay, I need some information on how to form my term sheet or how to validate my business idea or something like that. So there should be a lot of information for you to explore on our platform. But in its essence, the Academy builds on a foundation on founders. So where we Pre-Seed Ventures are usually participating in some way and giving a perspective from the investor perspective, we always strive to have founders on board for our events to tell you the story that we cannot because they've walked the path before us or before you, and hopefully will give you some inspiration and motivation on how to go about your own challenges in your own startups. Yeah, so that's kind of like the main idea about the Academy. We are not academic at all. We are really trying to pull it down into a very pragmatic and practical approach to how to build your startup, your tech startup. So this is the roadmap that we have been building a little bit. We have divided into 7 topics. And as you can see, we've had a lot of events already and a lot of knowledge and a lot of content already on our platform. So today we are here on the fundraising metro line, so to speak. And we've had a couple other events. And I've uploaded all this content related to today's topic on our website. So when we're finished with this, you can go explore these topics as well. Not everything is on our platform yet, but we're working on it. But there's already a lot of great content on the website. So also for this talk, it will be recorded, or it is being recorded, and I will send it to you in an email after the event, so you can look through it again, and maybe you want to re-listen to some of the main points. I will also share the slides in the email and a couple other key takeaways in the email, so have a look out for that. That should arrive in your inbox tonight or maybe tomorrow morning. And I will also link if we throughout this talk about something that you need a link to go to, then I will also include that in the email. So you should have everything there in the email. So we have a few other talks coming up. We have the first one in June, where we will go and talk about PR tactics when launching a startup. That will be together with my colleague Alice, and of course also a founder who is yet to be decided. We're working on it. And then also in August, we have another startup talk with our legal director, Jonathan, who will be talking about shareholders agreements and how to navigate an unpredictable future in your startup. So those events you can also sign up already. It's on the website as well. Today we'll hear Melina Madsen from WUBA, and who will talk about her own story and how she was fundraising and all the dilemmas and thoughts and all these things that she encountered when she was going through this process. And then we'll also have Helle. Helle is the co-founder and general partner of our new PSV Tech 01 fund here at Pre-Seed Ventures. And she has been working over 7 years as an investment manager and investment director. And so she has a lot of knowledge also from the investor perspective, of course, on what to do and how to fundraise your startup. So just a quick agenda here. So yeah, I was doing the introduction here, and then we'll get Helle on stage to get her best advice. And also, I know that she will be myth busting a little bit. Also looking forward to hear that. And then we'll have Melina on stage at 9:25. And then in the end, we'll have this Q&A where you can ask us the questions that you have. And it's very important that you ask the questions in the Q&A tab, not in the chat function. So at the bottom of your screen, you should see something that says Q&A. You can ask the questions as we go along or in the end, but I will pick them up in the end and facilitate this Q&A between Melina and Helle in the end. But anyways, if you have any questions, just fire it in the Q&A section, and then we'll pick it up. Oh yeah, and it's also important that to avoid a lot of the same questions, right? Then if you do find the question that you have yourself, then upvote your favorite questions, or if there's something that you would want to ask anyway, then upvote it so that I know which ones to prioritize. If you are after this talk still left with questions unanswered and you need more feedback or something, you can apply for our open door session, which is on June 2nd. Our open door session is 30 minutes that you get together with one of us here at Pre-Seed Ventures, and you can get a one-on-one talk on one of the challenges that you have in your startup. So next open door session will be with Helle. And of course you can discuss today's topic, but you can also of course take any topic that you think is relevant for this feedback session. There's also my colleague Alexander on board here in the middle picture. Also a very great guy, very sympathetic, and just really, really great to give some awesome feedback. It's very special this time also because we actually have Martin on board, and he is our CFO. So if you sit back with any financial challenges or something, even on a strategic level or practical level, then go and apply for this open door session, and you can speak with him. And he's usually not on these open doors, so this is a very unique opportunity. So don't miss out on that if you have anything you want to discuss with him about. So I think that was the very, very quick intro today to the topic, but I think we all came here to listen to Helle and Melina. So Helle, I think the word is yours.
Thanks, Louise. Let me just share my screen. Yeah, so hi everyone, and welcome to the talk again. Just want to start very brief with an introduction about or an introduction of myself. Who am I? Why am I speaking here? Why am I here today? So as Louise mentioned, I'm the general partner, one of the general partners of our fund, and I have a background as in a master in strategy and leadership many years ago from Aarhus University, and then I spent 8 years in corporate life, which ended up becoming way too political for me and too big of a ship to not be able to change any directions at all. So I changed my career path to go into a startup where I was a COO for a few years, learned how it is to work in a startup. It was actually a small software startup wanting to become a scalable software business with global ambitions. Ended up being sold. So actually they went through some of the same journey as all of our founders and all of our investments actually do today. And then after that, I found out that it was really interesting to actually sit maybe on the other side of the table and to be able to help and coach and invest in all those great ideas out there and the founders that wanted to go on this journey that I myself had participated in for 3 years. So that's what as Louise mentioned, I've been doing for the past 7 years. I've been investing in early stage software startups and sitting in the boards of some of the ones that I've invested in. So the headline of today's topic is that there is an analysis or a paper or a report saying that only 1.4% of Danish funding goes to female-led founder teams. And that, of course, is a little bit of a disturbing number, and it's not that it's that surprising. We do know that there is a big screw towards male founding teams, but it gets even more. It gets even more visible once you see the actual numbers, and we as a VC, we have to look at ourselves and say, okay, so are we actually missing out on some talent here? Are we missing out on something when there is such a big part of the population that we don't even see or invest in? So we've set ourselves out on a quest to try and do something about this, and what I would like to talk about today is why. Why is this the case? Why is it only 1.4% of the funding that goes to female teams? And what can we do about it? And to be honest, I would really like some inputs from you participants today, because we don't know. I mean, if we knew everything, we would just change and do it in another way. So we try to discuss this, and we try to make some adjustments and see if we can change this path. But we also need some inputs from all of you guys out there, and girls. So please, with your inputs and questions in the Q&A, as Louise mentioned, and she will be able to address the questions to me and to Malene also afterwards, or you can reach out after the talk, of course. So here I've listed some of the things that might be the reasons why this is the case. These are just some that we think, and there might be other reasons that, of course, we would like your input on. But one of the things that we always come back to is the lack of role models. I mean, at least as kids, we don't think we can be what we don't see. I mean, and this is actually also somewhat true once you grow up. And fact is, then when we look at the ones who made it, the big startups, actually was a list in the Danish newspaper Børsen a few days ago, 20 biggest tech startups founded after the year 2000, all 20 of them pure male founder teams. So I mean, when we look at them, of course, that's what we see. We haven't seen it yet. I mean, we haven't seen, and hopefully we will in the next generation, and I think actually we will. But as of today, we haven't got that many female role models with regards to tech startups in Denmark, at least. And then the next thing is, of course, we always ask, so what about you? Are you biased as an investor? And of course, that's also something we ask ourselves about. Are we biased when we choose which ones to invest in? And we don't think we are, but of course, we have unconscious bias, as everyone else has in the world. I mean, it's something that's just impossible to avoid. And we also might have the same bias when we look at the 20 companies that made it, that were on that list the other day. Of course, we want to invest in the next 20 ones on a list like that in 15 years. So do we have a bias where we see, okay, a successful founder, that's what they look like? So this is something that, and I come back to that, what we do about it is that this is something we really are conscious about and want to also discuss and work with. And then for example, when I ask my own founders, or the ones that I sit in the board of, I ask them, why are you only male founders here? And they tell me that, well, it's not that we want to be only male founders. They tell me that this is our network, this is our friends, these are the ones that we know, these are the ones that came on board with our ideas once we got the idea, and these are the ones that we surround ourselves with, our friends in our everyday life. So it's not that we don't want female co-founders, we just haven't met them. So yeah, that might also, and that's also the case, of course, in the whole industry of investors, etc. It's very male dominated. So there is also something about, of course, the circles that we find ourselves in. And then the fourth one, actually, I put on the list is willingness. I mean, and this might for some people be a little bit controversial. I mean, is there something about the fact that maybe a lot of females really just don't want to go on the journey that I'm going to discuss a little bit later? What is it that we are looking for? What characteristics are we looking for in the companies that we invest in? Is there something about that there are more females that just don't choose that path? Not that they can't, or not that they don't have the ability or the skills, they just don't want to. I don't know, question mark. And then the next one I put on is pipeline. We always discuss actually internally also that, okay, yeah, we don't invest in many females, but it's not that we don't choose the ones that we see, it's because we don't see them. I mean, there aren't that many female founders that reach out to us, and when we reach out, cannot find that many females. And then sometimes we conclude that, well, this is a pipeline problem. I mean, this is something that comes from not from our decision making, but maybe from another place, from further up the funnel, where we say, okay, so why aren't there more females that approach us? And that's something we could say, but we could also say the other way around. I read the other day an article saying, don't blame the pipeline, where you say, okay, if you can't catch the fish, you don't blame the fish, you change your technique. So again, we have to point the fingers at ourselves, and also discuss, is it something about how we deal source and how we look for the deals, and where do we look, and also how do we communicate in order to get people to approach us. And the last one I have on the list here is myth and expectations, and here in the next couple of slides, I'm just listing some of the myths that I have heard, and there might be a lot more, and you're welcome to pitch in if you have any other myths that you have seen out there. But if I just go through the four that we discussed, and Louise also came with some great inputs on, is so, okay, is there a myth out there that investors want to decide everything? I mean, once you have your own business, you get an investor, or at least a VC investor, they want to decide everything. That you don't want maybe as a founder. And to that I can say, okay, when we invest, we become a minority investor. That means that as a fact, we don't have that many rights, but we do have some rights. We do get some veto rights. That is true, because you can't get our money on a business plan, and then once you get the money, change your business plan and say, okay, now actually I changed my software business to become, I want to be a surf instructor in Bahamas, and I'm moving there, and that's what I'm going to spend the money on. So we do have some veto rights, saying, okay, we agree that this is the plan, so we can veto if we really don't agree on the plan that the founders approach us with after they get the money. But to be honest, I've never in my 7 years as an investor used that veto right, because we always discuss things and come to a common understanding on the path forward. So what a VC really wants is to invest in the team that is the best version of themselves. I mean, that's what we invest in. So we don't invest in someone who just does what we think they should do and what we say they should do, because that's not how you build a big business. Because if you want to build a big business, it's something that comes from yourself, and it's also about teamwork. Once we are investors, we are part of the team. That's at least how we see ourselves, and that's how we hope that the companies we invest in also see us. And the second myth that we bring up is, okay, so if you approach a VC investor, you need to know everything before you meet them, and that's not true. I can bust that myth, because if actually we get a bit concerned if a founder comes to us and say, I know everything, because to be honest, no one knows everything. But that being said, you need to have a strong belief. You need to have a strong belief that this is what you believe in, and this is what the business you want to build. And you need to convince us that you think you know what you do and what you want to do. But of course, you also need to take chances, and you also need to what the trick is you need to be able to adjust once you become smarter. Once you find out that the plan does not go exactly as you have planned, or things doesn't go exactly as you have planned, you need to be able to have the capacity to change your plans and to adjust along the way. So that's what we look for. We don't look for someone who knows everything. We look for someone who has the capacity to become smarter and to change their directions once they learn. So that's the second one. The third myth is maybe the third thing that someone thinks about before approaching a VC investor, or might not approach a VC investor because of, is that they think an investor wants you to dedicate all of your time away to the startup. And to be honest, I think that if you are a business owner, no matter what kind of business owner or type of business owner, whether approaching VCs or not, I think actually you already dedicate your life to your company. I mean, that's just part of the DNA as an entrepreneur, that you dedicate your life to your company. So I think that's actually maybe a little bit of an unjustified myth, because I think you might actually already do this. But that being said, we do encourage our founders to look after themselves and to take care of themselves and to have a work-life balance. Once you set out on a journey where you want to build a big business, which is what we look for, it's going to be a hard and a long ride. And you can't, no one gets a good results, not the investors, not the founders, if the founders burn out along the way. So it's in everyone's best interest that you find the balance that works for you. And actually that's also why we have dedicated, or actually we have set up a specific cooperation with a coach who sets up founder circles in order to, with the sole purpose actually of talking and discussing founders' mental health. And this is not something, discussions we take part in. This is something we try to keep at arm's length, or we do keep at arm's length. But this is something we encourage our founders to participate in and to actually spend time on finding out where is the right balance for you. Because if you don't, as a founder, find that right balance, no one gets a good result. And actually, I saw one day, a founder who exited his company. He said, if you think you're going on a sprint, it's not a sprint. You can't sprint all the way. It's actually a marathon. So you need to be able to find out where is that balance where you can actually keep your pace all the way through a marathon and not sprint every day, because no one is capable of sprinting every day. So this is, of course, also something that is in our interest, that you're able to balance. And then actually the fourth myth that we mentioned is that maybe someone knows that, or maybe someone thinks that if you approach a VC investor, or you have an investor in your cap table or as a co-owner of your company, they don't allow for mistakes. And that's also something that I can say that's not true, because we invest in founders that are willing to take chances, because if you cannot build a big business if you don't along the way take some chances. And if you jump in and take some chances along the way, you will also make some mistakes. But again, here I get back to what I mentioned before, is that it's not the mistakes, it's the ability to learn from the mistakes. It's the ability to adjust and the ability to say, okay, we have some hypotheses and we want to either prove them or prove them wrong. And that's how we work. And once we prove something wrong, we correct them and we try something else, or we become smarter and make smarter decisions. So this is of course also something that is actually needed as a skill when you are a founder and you want to build a big business. You need to be able to take chances, and by that also make some mistakes along the way. So some of the myths and also some of the things that we could think of could be the reason why we see that small percentage of actually female founders not only getting VC money, but also approaching VCs. Of course, we have to talk to them in order to actually be able to invest in them. So it's both a challenge, not in regards to our investment decisions, but it's also a challenge in regards to actually getting the female founders in front of us, or actually getting to talk to them. So these are some of this actually is a topic that we've been spending quite a lot of time discussing, and now we've also come to the stage where we've made an action plan of, okay, what can we actually do about this, and these are just some of the things that we're listing here that we're doing. And one of the things actually we didn't do a few years ago was even track these things. I mean, if someone asked us 2 years ago, so how many of your teams actually are mixed or male or female, we actually didn't know, because it was just not a focus area. I mean, we wanted to invest in the best founders, and actually we didn't think that much about gender. It was just the way it was. I mean, and now we've implemented in our CRM systems that we track everything. We track from the pipeline, from the ones we see, from the ones we talk to, the ones we invest in, etc. Which ones are male, female, or mixed teams. And actually, we do believe that the best founding teams are mixed, but I'll get back to that. But I can say for now, actually, that we have in our new fund, we have our first 20 portfolio companies now, actually already, some of them smaller investments, some of them bigger investments, or in the amount of money that we put in. But of those 20 companies, no one is pure female founding teams, but there are 3 mixed teams and 17 pure male founding teams. So it's not good. It's not horrible. It's for sure not good enough, but it's actually pretty much the same as what everyone else sees. Yeah. So some of the next or the other things we put on our initiatives to try and work with these issues is that we want to report on these things. Now we track it, and then of course we need to report it, and then we need to discuss the results. So this is also something you could say, okay, so does that change anything actually just to measure it and to discuss it? And actually I do think it does, because we get a chance to discuss it every time we look at the results. So quarterly, internally, we've decided that we have quarterly meetings where we discuss, so what is the gender balance in our portfolio and in the pipeline that we see for the last quarter, and what are our initiatives? Is there something else we should do? Are some of the ones that we already do working or not working, etc.? Same as what we expect from our founders in order to adjust along the way. And then we've also committed to actually, and I'll get back to that, to report our results yearly externally to the media. And that's also something that we think will at least force us to discuss it externally, but also force a discussion, hopefully in society as a general, because some of these things will be public, and hopefully some future female founders will read these things and get to think about, why is that, and is it actually something that I would like to be a part of the change of. And then the third one here is we want to educate ourselves. As I mentioned before, I'm sure we have unconscious bias, as everyone else has, and this is something that we have decided to educate ourselves on, not only on reading about it, but also on getting some experts in to discuss it with us and to challenge us, to see if we can get someone externally to see what we don't see ourselves. So this is something that we have planned within the next quarter also. And then we have some things that I mean, there's also always the discussion about whether this is something we could change with quotas. And we really don't want to force any quotas, because you can't force someone together to build a business that has the characteristics that we are looking for. But what we can force is that every time we recruit, for example, a new board member to our portfolio companies, that we need to include female candidates. And we can also encourage our portfolio companies that every time they interview candidates for new hirings, that should include female. And now and I just want to say one thing is that this event is only about male female. That's of course only one diversity parameter. There are a lot of other parameters that you could discuss, and we could discuss that maybe in another talk, but for today we'll just keep the most simple one, and the most visual or maybe visible one is the one that is about gender. And then also internally in our own operations, we want to become or be an even more diverse team. We are actually a diverse team already compared to almost any other VC you can find out there. But we of course want to improve, and we also said to our headhunter actually a few weeks ago that we needed to find a new investment manager, and actually when he came with the shortlist to us of 21 people, he actually only could come up with one female, and to be honest, that's just not good enough. And this is also something we need to pressure our partners on, and also ourselves on, is why can't we find more potential female investors? Because once you become an investment manager in pre-seed ventures, you are actually on the path to, if you want to, and if you work for it, to become a partner in a VC fund on the long run. And of course, we want to participate in getting that diversity also on the investor side in the future. And the last point actually I put up here is focus. I mean, this is something we spend time on now actually, and this is something that we talk about, and this is something that we have events about, as this event, and every time we have an event, and on the right side of this slide we've shown actually 3 events we've done within just the past month actually, all focusing on diversity. So this is something we spend time on. This is also something we try to participate in, whether we host the things ourselves or whether we get asked by someone else to participate. And just to point out one specific initiative is that we've actually co-created together with 7 other investors the diversity commitment. And this is something where we've set together in the venture business in Denmark, or in the early stage investor business in Denmark, 8 different partners talked together, or 7, actually 8, counting ourselves in. We discussed how can we change these things, and could we put up some goals that, and this is where we actually committed to discussing this not only internally but also externally. And we've committed together with these 7 other partners to compare our results yearly, and to discuss our results yearly, and to discuss the whole business. How can we as a business of investing in startups do something about this issue? And actually what we agree on in that group is, when we invest in what hopefully will become the future unicorns or the future big businesses out of Denmark, we actually have a big opportunity to actually change things for the better in the future. And we also have a responsibility. I mean, if we are one of the ones that actually co-decide which ones get funded and which ones don't get funded to be able to build the businesses of tomorrow, we should have a focus on how we can do that in the best way possible, in order to build the best businesses also that people want to work in the future, and that can attract the future workforce and the future funding, etc. So this is something that we really see as a responsibility actually as a business also to work with this. And then actually I come to the part of the talk where I want to discuss a little bit more about, so what are we actually looking for as a VC? And this is something that when I discussed it with Louise before the talk is, well, I always tell people what we look for. We look for some specific characteristic in companies, and it doesn't matter whether it's female or male founders. It's the same characteristic of the company and the vision and the plan that we look for, and that all VCs actually look for. So what I don't know is whether females have those characteristics presented in another way in order to appeal more to female founders. And I think, and that's coming back to what I mentioned before about the myths, and that might actually be some of the reasons why these characteristics are the things that I want to tell now afterwards don't appeal to females. Maybe that's because some of the myths that we've already discussed, that I have already discussed before. But once you have your own business and you want to decide, or you you look at your co-founders and you ask yourself, okay, so what do we want to do with this business? Do we want to grow it, and do we want to get investors in to be able to grow it maybe even faster than what we can do without external money? And one of the first things that you have to ask yourself is, what type of founder are you? I mean, what type of founder are you? And by that, what type of investor do you actually match with? So just to mention a few, I mean, you are a startup and a founder and an entrepreneur, no matter what business you set out to build. And it could be a coffee shop, it could be a freelance business, or it could be something where you have really big global ambitions. And all and these are of course stereotypes, but all of the ones could attract investors. It's just different types of investors that they can attract. And I discussed that in the coming slides. Why is it that we look for a specific type of companies to invest in? So the next part is actually the characteristic that we always look for when we screen and when we see pitches and when we talk to founders, whether they fit a VC journey, as we call it, because the plan is, when we invest, is not only to invest once, but to invest more money and to grow at a rather fast pace. And the reason why that is that once you decide whether VC money is the right match for you, you actually have to understand what is our business model as VCs. I mean, we have a business ourselves. Our startup is our fund. As I just told Louise and Malene before you all came into the room, we discussed that last night. We had a meeting with our investors, the investors in our fund, and of course we made as a fund and as founders of the fund, we made some promises to our investors about what are we going to do with your money, and how are we going to return them to you, and what type of businesses are we investing in, etc. And what VC invest, or LPs as they're called, the investors in a VC fund, what they invest in is, you get an amount of money from me, and then I expect that amount of money to return three times to me. So when we get 350 million Danish kroner, we have to return 1 billion. So that's just the business case of a VC, is that in 10 years or maximum 12 years, we have to return the fund 3 times. And since our business is to invest in early stage tech startups, you know that this is high risk. I mean, we invest early, and that means that there are a lot of the companies that we invest in that just don't make it, and we need to take those chances, because this is what we're in the business of. We're in the business of investing in the best founders and the ones with the best chance of making it, but we also know that some of them will not make a big business out of it. And in general, you could say that 1/3 of the ones that you invest in out of an early stage VC fund, they will not return any money to the fund. And maybe 1/3, if you are lucky, if you are very lucky and very good at picking the right ones, 1/3 of the companies that you invest in will bring you the money back 1 time. So that means that the last third, or maybe even 1/4, is the ones, or maybe less. Sometimes it's just one company that actually returns the fund 3 times. And the big problem for us as VCs is, of course, we don't know which ones until in 10 years. So that means that once we do invest as the very early stage, or that make the first investment, we need to be able to see that if this company makes it big, it's going to be a big winner. It's going to be a really big winner. So it's not going to be a coffee shop, because a coffee shop, no matter how well you do as a coffee shop, you cannot return a fund 3 times. So that means that we have to be able to see that potential. If everything goes well and everything goes after the vision of the founders, that actually they do have the potential to make it really big. So that's just a parameter that we have to look for in order to make our business work. So that's one thing that and then of course we try to see, okay, which characteristic does a company with that potential then possess? So we see, okay, so if we look for those potential global winners, what do we need to look for? Because we invest so early, so we can't look for a business that's already up and running. We can look for the things that we think will have that potential, but we don't know yet. So that means that the most, or I can't stress that enough, the most important thing that we look for is the team. I mean, what is the team that we're investing in? We invest in people. As early stage investors, we invest in the team, we invest in the drive, we invest in the vision, we invest in the general energy, but we also invest in the complementary characteristic and skills of the team. I'll get back to that. Actually, maybe I should just go through, these are the 5 characteristics, and the first one I mentioned is the team. We look for a team that has a purpose and a big vision. I mean, you can't build a big business if you don't see the fire in the eyes of the founders that they really want this, and they actually have a bigger vision than just making money or just building an everyday job for themselves. They have to possess that vision of making something big. And then, of course, we look at complementary skills. And here is something where we really want to see diverse teams. And that's not only diversity with regards to gender. We really want to see, because if we see 4 founders that have the same background, the same skills, that's not very complementary. And that's not very likely that those 4 founders with the exact same skills will be able to build a big business. So we do look a lot at the diversity of the team. And we would love to see more diversity with regards to gender, but also other backgrounds, because these businesses are going to build products for buyers that are also very diverse. So we know that it's good business to have a diverse management team in companies. And then the last thing we look for is what we call grit and execution, is that we need to invest in teams that get things done. I mean, we can't invest if we can't see that they have the power of execution. I mean, there are so many ideas out there, so many startup ideas that could have become very big businesses, but never did, because no one did it, because no one made it happen. So this is also a very important characteristic of the teams that we look for, is do they get things done?
Helle, sorry to interrupt you, but we need to wrap it up so we can give some time for Malene.
Oh, sorry. The time is just running. Okay, let me just, actually, I came through already now the most important things. Team is the most important thing. The other characteristic we look for is, of course, there needs to be a big market. I mean, you can't build a big business if there is not a trend or a growth or an opportunity in the market. Also, you need to have a good idea. I mean, the product needs to be something that is cheaper, smaller, bigger, faster, more efficient than what already exists out there, something that users love, and maybe also something that you can prove actually from some type of traction. And I don't know if I have the time, Louise. Should I just wrap up very, very, very fast? I mean, not just the last 2 slides, is scalability. I mean, if you have any questions about it, you can always get back to me. But scalability is something we look for, because of course you need to be able to grow rather fast if you need to build a big business in 10 years. And the last thing I want to mention is you also need to build some kind of a sustainable edge in your company, and build up some kind of barriers of entry where you can't just be run over by some competitor from one day to the other. So yeah. Sorry for, I just completely missed the time.
Okay, Helle. I think we'll do it like this, because time is really, really running fast. That we want to give some time for Malene, of course, and hear her story. So what I think, if you're okay with it, Helle and Malene, we'll just do the Q&A after 9 o'clock, so that Malene has time to, or 10 o'clock, so that Malene has time to give her story.
It's very important that we hear Malene's story. So let's dedicate all the time to her story, and then if any questions, let's take it after.
Exactly. So we'll do the Q&A after 10 o'clock when Malene is done with her presentation. So you can stick along if you want to do the Q&A as well. So Malene.
Hello, everybody. This is going to be a speed talk. So just be ready for my tempo here. First of all, thank you very much, Helen, for taking up such a sensitive dialogue. I have a lot of pointers about everything you said, and I know there is a lot of people out there that has great comments. But first of all, I want to make an introduction to myself, and then we can go in and take a look at my funding experience. My name is Malene Madsen, as you probably know. I'm the CEO and co-founder of Voba, which I started with my my beautiful partner, Mikkel Bindesbøl, 5 years ago. Very shortly, Voba is a SaaS platform, a SaaS solution that today help over 100 customers with improving their employee retention through data-driven feedback. And I can tell you much more about our company, but that's not why I'm here. Personally, to put this in a context, I have a research background in work psychology and philosophy. And I specialized in the link between, you can say, employee data and preventive strategies to reduce mainly work-related stress. Today I'm a CEO, and I sit with the responsibility both of product development, but also the financial and strategic operation, and therefore also our funding plan. To start from the top, I have totally raised about 9 million kroner in funding for our company, which is a combination of soft funding and what you call hardcore funding. But it has not fallen down from the sky. It has been really hard work. I'm a first-time founder, and I want to say to you guys that I really feel like I've lived 10 lives with all that what I've experienced in these years. So let me just zoom in on my funding experience and try to share the most valuable knowledge with you. So let's go back in time to the birth of Voba. Even though that Mikkel and I are first-time founders, we were very lucky to have some experienced and successful business owners around us that, you can say, gave us guidance for our funding journey. And I remember that the first main advice that I took in, which is actually very common sense, but is don't raise funding at a too early stage when you don't have enough proof of your product or business model. Then it's very, very tough to get a good valuation. You'll give a lot of equity away, and you'll give away a lot of control. So my solution for that advice was to start with soft funding as long as you can. And I actually closed the inner booster 3 times in a row that kept us going for 2 years. And that decision was really crucial because about 2 years ago, we were 6 people. And we began to see the first proof of our business model. We moved from not having only a good idea and a prototype, but we actually also have, you can say, real paying customers. And we began to document our product, that our early users loved Voba, and they actually stayed with us. And even though we didn't have a lot of capital, we managed to attract a team with very strong domain expertise, but also a strong product sense. And everything that Helle has just told you about, we had like a box of, you can say, metrics that you need to take off, and I then knew that we're about to start the preparation for a seed funding round. So let's take a look at the funding preparation time. And again, because it was my first time raising funding, I knew how important it was to start the preparation as early as possible. So 2 years ago, I basically cleaned my calendar for 2 months, where I simply blocked time for only developing a solid pitch deck. I listened to tons of podcasts, best practice experience, walk and talk with other SaaS founders, which maybe can sound like a bit of an overkill, but it really wasn't. And I actually used all of this feedback to you can say develop the first minimum viable product of the pitch deck. And I want to share with you that I was really surprised how long time it took me to translate my early idea thoughts into a simple business case. And don't underestimate the time here. I was also surprised about you can say the level or the amount of content and the standards you need to put in your pitch deck. Just to give you an example, you need to have maximum 15 slides, but then you also need to clearly communicate your value proposition, financial traction, market size, competitor landscape, defensibility, funding plan, and how you're going to use the money. Totally clear. And that takes time. Especially for me, I came from a research background, and to translate it into business language that was so clear to so many investors, it takes time. I can't underline that more. After my first, you can say, MVP of pitch deck, I knew it was time to challenge it. So I made several test runs with a lot of successful fundraisers and VCs, mostly men also. I haven't met Hella at that time. I wish I had, but mostly men, to validate the content of the pitch deck, funding, size, valuation, stuff like that. And again, I used all of their feedback to again make like 10 to 20 different versions of the pitch deck before I nailed it. I want to share a very, very important experience with you. And that is, you can say, to how important it is to have your numbers correct. And I actually made a cooperation with a very skilled financial advisor that helped me build what I called a financial fundraising cockpit, which, when I look back, is actually one of the most important decisions I made. Because I want just quick up, what is the financial cockpit, Malene? It's basically just a way of budgeting, but includes the most important metrics that demonstrates the health of your business. For my sake, it's customer acquisition cost, lifetime value, churn, all of these boring metrics, but very important ones. But helps you to build also a solid forecast model based, and maybe that's a little bit complex, but based on the financial assumptions that are embedded in your closed deals. It also helps you to build a more solid valuation because you can back it up with numbers, and it also helps you to build a better funding plan. So for you guys, I just want to say I could not have created such a detailed financial plan on my own, and I was not too proud to ask for help. And really, you can say that paid back 100 times, because I never got a question in my own selective memory, of course, a financial question from investors that I couldn't back up with numbers. And that comfort really is so crucial. Then you can almost get away with everything in your pitch deck, because if you have your numbers straight, you're good. So while preparing for my pitch deck, funding and financial cockpit, another crucial advice that I took in and benefited from was, again, very common sense, but start your outreach to potential business angels and investors as early as possible. Personally, I was very lucky to have the investment director of Pre-Seed Ventures, Anders Kjær, with me. That made a lot of early introduction for me. So I actually built this huge investor lead list. So about 1.5 years ago, I started to have my first, what I will call back-to-back meetings with this investor lists. And actually, already after 1.5 months, I got 2 offers from by founders and Bumble. And several business angels. And I was totally overwhelmed by the positive feedback that I got from investors. I actually stood in a situation where I felt I could choose between well-known venture funds, and this feeling was just amazing. But there's always a but. Then Corona hit Denmark, and Bumble Ventures and By Founders choose not to invest in new startup companies. They wanted to put all their capital in their portfolio companies for their survival. And if they should make a deal with us in Voba, they wanted to squeeze our valuation down to a level that I could not accept. So I was like, fuck. I was really, really disappointed. All my preparation, all my work that I put in it, and so after kickboxing, you can say, with the wall for 24 hours, I was clear in my mind that we need to make a pivot fast. But the good news was that after my anger management time was that after the Corona lockdown, we actually landed a partnership. That was also a pivot in the strategy, actually, with Value Pension, where we developed a new product, a COVID-19 survey pulse measurement that measures the well-being temperature of employees and gave their managers real-time feedback. And we actually made more money because of this product than ever. And all of this happened in 1 month. So I then took my lead list again, and I figured out a new way, because we started to have better traction, and then of course our business plan or a business case changes, and we were actually in a fortunate financial break-even situation. So then I realized, if we continued this growth, our valuation will increase to a much higher level next year, and therefore the seed round will be the most expensive one. So my idea was, maybe I should raise a lower amount from an investor and top it up with a loan deal from Vækstfonden to give away as few equity as possible. So based on this new idea, I made a totally new constellation of investor setup. And I made a first outreach to a business angel, which you probably know, called Morten Christiansen, which is CEO of Tremobil. I call him the king of subscription-based model in Denmark. Then I spoke with investment manager director Anders Kjær from Preseed about my thoughts. And then afterwards I spoke with Vækstfonden. And to make a long story short, 1 year ago we closed a total round of 6.5 million with Preseed Ventures, Morten Christiansen, and Vækstfonden, which was freaking amazing. I can tell you so much more about my experience and the actual pitches with investors and the learnings during due diligence, but less is more. And therefore, I just want to sum up my 6 best advice for you guys for raising early stage funding. And of course, a disclaimer: this is my experience, and I don't know if it works for you guys, but I'm just sharing the advices I could give to myself if I could talk to my early stage funding now. But the first advice, and always when you do this, is so common sense, but I will try to give it a little bit more depth. So the first advice is about that I have always known that our Achilles heel is that Mikkel and I are first-time founders. We haven't taken the journey before, and therefore we knew it was crucial to create this solid network of experienced and successful business owners. And that decision has given us priceless guidance and clarity during our funding journey. The second advice is actually, again, the most common advice, but preparation is key. The more homework you do, the more clear is your business case and your budget to investors, which significantly increase your probability of raising funding. So the third advice is that I quickly found out when I started to make my first test runs of the pitch deck, that things that were obvious to me and my founder team could appear totally unclear to someone else. So my third advice is that it's really important that, of course, you challenge the clarity of your pitch deck by someone in your network that has closed funding before or have experience with the investment journey before you send it out. The fourth advice is based on the story or the advice that I had, Anders Kjær gave me for Pre-Seed Ventures. And I remember he said to me that, Malene, there are so many external factors that can decline the process, and you can't predict what is going to happen. So it's, for example, you figure out that 30% of the VCs in your investor list don't only invest in companies with 1 million in annual recurring revenue. Okay, declined. They figure out when they hear more about your case that they have a competitor in the portfolio that has too much of comparison with your main product. So there are so many external factors that can decline a product. Corona lockdown, for my sake. So it's never good to depend on a single investor candidate in a recruitment process, but bring in multiple investors in the same round if possible. And the fifth advice is, don't be afraid to be transparent. And what I mean about that is that a very important advice is that it's crucial that you are honest and transparent with your numbers. And I don't assume that you don't want to show your correct numbers, but it takes time to figure out and to be clear about your budget. And that is just so important. You are sitting with the most skilled people, and you just need to back your idea and your business model, everything in your valuation up with solid numbers. Yes, and the last advice is you can say two-parted. I started with maybe a naive approach for our first funding round by thinking, if I get this amount of money, we will be able to carry ourselves. But business angels and venture capitals, especially venture capital funds, only invest in high growth companies. We are talking like 300% in annual recurring revenue growth. And for that growth path, you need skilled people around you and a lot of funding invested in your team. So if I could say something to my early funding self, I would say, Malene, seed, Series A and Series B exists for a reason. Why you have to figure out before you hit the funding pitch floor what your funding plan looks like and what amount of capital you need to attract your or reach your end goal, and how you will use the funds. And maybe the most important advice is really to ask yourself, can you see yourself in this plan? Are you just trying to please the norms of investing today? So my best advice is that you actually take a step back and answer this more existential question, because when the funding is closed, there are no turning back and you must meet a lot of demands. And as Helle also talked about, this can be a tough world and it's not for everyone. But when that's said, all studies shows that organization with female founders or co-founders generates better revenue, have high standards of value and impact. And I have no doubt in my mind that we need more women to just fucking do it, to make the world better and a more equal place. So thank you very much for your time.
Thank you very much, Malene. So we're going on to the Q&A. So we are a bit over time, but we'll do the Q&A anyways. How's your time, Malene? Do you have time for an extra 10 minutes? Cool.
Yes.
So And for all of you, this will be recorded. So if you have to run now, then you know that you can actually watch the Q&A afterwards. But of course, it would be better if you stay, because sometimes I experience that people ask questions as we also go along. So it would be nice if you stayed and asked some more questions as well. So I think we will just skip straight to it, and I think we should start in a very democratic way. You have upvoted a question here about how can you, Malene and Helle, make a real difference in diversity as role models. So maybe we should start with Helle.
How can we make a difference as role models? I mean, what we can do is put ourselves out there. I mean, for me, it doesn't come natural for me to go up on a stage or actually to go talk on a talk like this and stuff like that. It's something that I've had to teach myself, and I have to do it because once you see female investors, I want to do it also because it's good for our business. I mean, once you see female investors talking out there, you see them on stage. Now I can talk for an investor. I'm not a founder per se of a startup, at least of a fund. But once you see me on a stage, or you hear me talk, etc., you see that it's you just see that there are female investors out there, and there are female VCs, and that just brings something with it. I mean, yeah. So that's at least what I'm trying to do. I'm trying to say yes to the things that people are asking me if I want to participate in order to actually just show people that there are female investors out there.
All right, thanks. And from a founder perspective, Malene, you mentioned to me earlier that you really wanted to also be present and show that there are women that are also awesome founders. So what are more thoughts on this?
I think I have the same thoughts as Helle. It's so important for me to prioritize to do something like this, to go to events and share my voice and my experience and to be present and to be seen. As I talked with you earlier about, I have really missed role models when I started, and you can say, and in that regard, I've always been a little bit atypical with everything that I've done. I have actually always choose like male dominated fields. But I think I'm also a bit crazy, but I know how important it is to go out there and share my experience, but also for my company to recruit women, and as Helle also mentioned, like, we are in a software business right now. After we closed the investment, we need to scale our team from 6 to 12 people, and these 6 hires, they were crucial that they are specialists and they have muscles to take our business to our next step. And you can say the candidates that came in for software development and CTO position, stuff like that, was also 99% men. And even though I manage now, we have a team of 12 that we have four very skilled women. So it's both about my recruitment process, but especially it's also to be out there and share my experience. Yes.
All right. We have an observation here from Dorte, who says, I guess a problem is also that successful female founders are asked about their beauty routine, not their founding experience. Helle, do you think there's something we could, use when we talk about that we should have more role models out here, and at least as investors, but also as founders? Do you think this will actually change this, that maybe, this will make a change?
I'm not sure exactly what the question is actually, but I mean, at least as I mentioned before, we really try to make it to treat every founder equally when we see them, and we try to ask them the same questions and we try to challenge ourselves on our unconscious bias, etc. So we really do try to make it not about the background or the gender of the founders, but about the business and the vision and the plan and the skills and the personality, etc. So yeah, I don't know if that answers the question.
All right. So here's a question in a whole different ballgame. And this is from Malene. And Caroline asked, are there any helpful sources to what a financial cockpit should include? And how early would you start building this already from the beginning?
First of all, I didn't even know the term financial cockpit. It's just my own term because I think it states that it can, you know, do a lot of things financially. But so there are any sources. You have to find the financial advisors yourself. I knew that I didn't come from a financial background, so if I wanted to put myself up at the top best, I needed to have some support. I chose Tofte and Company because I know Sasha Dalgaard, who sits in there and is a very hardcore financial woman, and she's actually my friend now. But she really helped me to understand the financial side of investment, and it's so crucial to, like, I don't know if it's the right advice for everyone, but I can tell you so much that I still use this cockpit today to control my company. So my forecast model are so much more clear in terms of expenses and income and my metrics and everything. So there's a lot of sources, but I would recommend, of course, that for example, if you're part of pre-seed, so get so much knowledge as possible yourself and build it up. If you don't have the Excel skills to do it, because it's a huge cockpit, then brings a financial advisor in that can build it up for you. Because when you first have it, then it's pretty easy to operate yourself.
Awesome. I just want to say that we also have a few startup talks actually mentioning the metrics that are very important as a startup. So you can also find those resources on our platform. So I think there's actually a tag called metrics. So you can explore that topic even further from other people as well, what they recommend you to do. All right, so let's see if we can just stay with you a little bit, Malene, because there's a question from Sancha. How many women are in your team? You said that you were 6 people. Do you think that the fact that you are a woman CEO makes a difference to other women? And if so, can you give an example?
Was it a two-sided question?
Q&A tab, so you can read the question as well. If they get too long, you can open the Q&A tab as well.
So now we are 12 people. So I hired, and we are 4 females here. And the question was a little bit too divided. What was the other part? So if I could do a different.
How many women are on your team? And the second part is that, do you think that the fact that you are a woman CEO makes a difference to other women? We kind of a little bit covered this in terms of role models, but maybe you could explore a little bit more about the, hiring other women. Because as Helle said, when we were trying to find an investor, female investor, it was really difficult. So how could you find so many women in your company? What are you doing?
Charming. No, no. I don't know. I think it's of course. I don't know if it's easier to attract other women when you are a woman. Maybe it is. I maybe have a story about that they fell in love with the vision of Woba and the passion about it and the team and not so much of my gender. I think people are more purpose driven than ever, and they have a huge thirst for meaning. And I'm so lucky to have founded a company that actually has a purpose-driven strategy and a vision, and you can feel that energy and spirit when you come into us. And in that regard, because it's more like a soft topic, maybe that has more attraction to women. That maybe.
Okay, so there's actually a follow-up question here from Caroline. As a very early stage startup, I find it difficult to find formal startup networks to get and share experiences on how you build a company, meaning it all depends on personal network. Do you have recommendations on good networks in Denmark and potentially internally that are free, cheap to participate in? So Malene, are you in some kind of network? How are you building your own network?
I'm really not. I have never danced with network. Like, it has never been my thing, and I have never been to. Actually, I'm the worst person to ask about it. I always take like individual people. For example, Anders Kjær, and then I have Sasha Dalgaard, which can seem like a very tough woman, but knows so much of the financial side. So what I do actually is to map the skills that complement me and find these people. And it's about outreach, and I get Pre-seed is an enormous source to, if you map that, like I really need to have more of this knowledge and foresight, and in my company, for example, the financial side or the funding plan, or how do I do the valuation, stuff like that. So map all the things that you actually need to accelerate your ship, and if you just show that to Pre-seed Ventures or your contact in there, they have a huge network of very skilled people that can support this. So that's how I've done it, and my experience just with a huge network is that I actually don't get so much value from it, because it's very, of course, the more people you are, the more general it is. And if I have these angels that can support me with this specific area, then it has just gained so much value. So, and I don't say that I don't recommend like huge networks and stuff like that, but I have just benefited from choosing individual person with a specific skill.
Do you have any recommendations, Helle? Your network as a female founder, or?
I would say that at least things were a little bit easier before COVID, because there were actually a lot of startup events. Once you start following startup people on social media, you will see that there are loads of events right now. Unfortunately, they are online, but hopefully soon there will be physical meetings again. So there are lots of chances to meet other startup founders out there, and another thing I would recommend is if you have the chance actually to become part of one of the shared offices that where startups are sitting and working every day, because you do learn a lot from those offices, because you hear a lot of things and they are really good at the knowledge sharing. So that's two things I would recommend.
Great, thank you, Helle. So we'll just.
I actually want to, in that regard, I want to recommend where we set 2 years ago or 2.5 years ago, and we applied for sitting at Copenhagen School of Entrepreneurship at CBS, and that was a really valuable place to be around. Not only with the people there, they are on the same equal level, but they also have employed people there that are constantly like trying to validate the stage you are and help you with coming to the next stage. So I can really recommend Copenhagen School of Entrepreneurship. Yeah.
Yes. All right, so we actually have an input from Vanessa in the chat, giving some tips on where you can find a few networks which were useful to her. Also, if you are in a network and that you think works out, then put it in the chat, and I'll collect it and send it out to you all in the email. So feel free to put it in the chat. And there's also a tip on definitely sign up to the Startup Digest Copenhagen. Yeah, so I'll include that in the email as well. So I think we'll just have time for the last question here, and Helle, will just stay with you for a little bit. It's Mia who asks, can you name some reasons for not investing in some of the female-led startups in your pipeline, and how did you give them feedback?
I mean, we give the same feedback as we give to male founders. So it's not like there is a difference there. And if we don't invest, it's because of the things that I mentioned before, that we don't see the potential in the team or the market or the product or the scalability in the business. And we do try to give that feedback to the applying founders, that this is the reason why we don't think, at least for now, that you fit a VC as an investor. So it's not like there's a difference in the feedback whether you're a male or a female. We could also give the feedback sometimes that your team is just not diverse enough, and it's not that we say you need to have more genders on your team, but that's specifically on with regards to skills and competences that they just miss in the team, crucial skills, etc. So that's what we're trying to do.
Okay. I'm actually just taking one more question in, because I think it's very important to talk about. There's a question here. Do you see startup founders in another way than your male colleagues?
I mean, if I see female startup founders in another way than male founders,
I think just startup founders in another way, because you are a woman. Do you see them in a different perspective?
I mean, to be honest, right now, I think that with all the focus we have on this issue, we actually have an extra look at all the founding teams that are including females, because we really want to make sure we don't miss anything, and we want to make sure that we don't discard something that could have the potential that we're looking for and be a great match for us as investors. So to be honest, right now, I think that we just have an extra look at the ones that are with more diverse teams.
All right.
Yeah.
Yeah, Melina?
Yeah, I just want to say that it's very important that it's a sensitive dialogue, but that it's a fact that there are so few percentages of the funding that goes to female founders, and that is just a fact that there is a bias, because it's not like females. You can compare it with racism in the States. Like because there are more Black people in prison, is it just because that Black people are more criminal? I don't think so. Like from nature given, and that is the same like metaphor for women. Like of course they have the same skill set, but there are something that are biased both from women, but also from the investment funds. And this dialogue, we need to figure out the reasons why. And from my perspective, if I can talk for myself, it is a hardcore world. And if we look at it historically, it's, you can say, defined by men. The standards are defined by men, and Helle are just positioned in that. So that is history. So we are actually going in a definition of a pitch deck standard, the 15 slides and the content in it, and that is defined by men. And all of this norm, it takes time to see, to go out from that world and maybe see other perspectives on how you could make a pitch deck, how you can make a funding journey and stuff like that. Characteristics is very male dominated characteristics often. And or how you define that, of course, people will probably put them on me, because I have never any problem with taking risks, for example. I have never any problem with just stating what my opinion is. And people can be a little bit afraid of that sometimes, but that is just who I am. And what I see in the majority of women, it's another way of going in and taking the room. Maybe it doesn't make sense what I'm saying, but I actually talked with the CFO of a huge company about this, because he said, okay, we are going to a Series A round. Oh, this is going to be hardcore and stuff like that. And then I said, I'm going to have this talk with you. And I try to talk about that maybe there is a problem that all definitions about what a good founding team is defined by men. So what we do here today is redefine it, and it takes time to do that. That is just history.
Yeah.
So
would you like some final comments on that before we?
I would just say that it makes perfectly sense, everything you say, Malene, and I completely agree. And there are so many issues we could take up. This could be a whole how we raise our kids, etc. And I think actually you have a really great point with regards to taking risk. And as you mentioned before, you come out of a skateboarding world where you are used to taking physical risks about doing things that might not feel comfortable, but I want to try that ramp or something like that. I mean, that is a huge benefit for you now, I think. And yeah, that's a whole other talk. There are so many issues that actually are the reasons or underlying reasons for why we are in the situation that we are. And we could have a whole talk about that as well.
All right. Well, I think we should.
But I just want to encourage everyone to reach out. If you think you have a business that that might be what could be a good match for VC investors, don't be afraid of reaching out. We are always available. Our emails are on our website, so it's pretty easy to find us.
Yes. All right. Thank you. I think we'll end the today's startup talk here. As you said, Helle, we can discuss this for a very, very long time. There's a lot of still unanswered questions and a lot of work to do yet. But I think for today we'll cut it off here. So thank you very much, both Malene and Helle, for joining us today, and everybody that has been listening in as well. It's great to see that so many are interested in this topic, and it just really confirms that this is very important. So stay with us. There are more events coming up, and otherwise just I hope to see you around. So thank you, and